And here we go. What's going on, everybody? Let's go ahead and get started. You're going to turn it on Instagram. Make sure that it's on Facebook. And we are live. This is Travis Witherspoon from Carter Cow Capital. Carter Cow Trading on Facebook and on Instagram. Hi, everybody on Instagram. Trade with Travis on YouTube. Hope everybody's doing very well on this Friday morning. Remember, typically Fridays, not necessarily the day where we're looking for a lot of trading opportunities. But if we do find something, then we'll go ahead and take it. And like always, we do find an opportunity. Obviously, I'll be able to send it over to you, and obviously, you can be able to do what you want it with yourself. So let's go ahead and get started. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision about what you want to do for Forex trading. Now, understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind, and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So show myself on the screen. Hopefully everybody's doing very well. I can see everybody on Instagram for the people that will be watching this either now or be watching this later. Thank you for taking the time to be able to watch. I can see everybody on YouTube right now hopping in. So thank you for hopping in and being able to watch this. Once again, share this video with people that you think that, or share this with people that are interested in being able to learn how to Forex trade, don't have that outlet on being able to figure out or know somebody that does it or anything else like that. Would love to be one of your mentors or being able to help you out for us getting started. And now I can see myself on Facebook. So with that being said, if you're new here, what we do is this. We end up spending about 30 minutes to be able to look at some of the major U.S.-based pairs. We end up looking at some indices. We end up looking at some looking at other trading pairs and talk about overall trading strategy. And if we have a trading opportunity to be able to take, kind of like what we did with gold yesterday or gold a couple of days ago, hopefully you end up taking profit on that and being able to make some out of that. Then from there, you can be able to make money with us. Now, keep this in mind. I do mentor, and this is my business. This is something that I do on an everyday basis. We have our next boot camp that's actually coming up October 26th to October 30th. It's a 5-day boot camp, lasting about an hour each session. It is live streamed, so you don't necessarily have to meet us. We'll end up meeting you in a Zoom session meeting. In a Google Meet session meeting. And then from there, you end up going through a lot of different things throughout that session. So if you're interested in being able to learn, it's only $20 a day. You end up getting a lot of material that's going to end up helping you out for us being able to get started. And everything is streamlined to be able to make sure that it's personalized and you can be able to learn and be able to maximize your overall time there. So interested in being able to learn in that, all you have to do is go to Believe in Yourself Bootcamp, bit.ly/Believe in Yourself Believe in Yourself Forex. Sorry, it's actually in the chat box. For each and every one of y'all, you can be able to go from there. All right. So with that being said, let's go ahead and take a look at the charts. Let's go ahead and go through our trade mechanics, and then after that, we'll go ahead and go from there. It's funny. I was kind of looking back at my previous videos. I've been doing this for a long time, and I was kind of looking at my hair when I ended up doing this. Remember when I first got started, I didn't have any hair. Going into this last year, I had to shape up. And now I'm looking at my hair now. It's like, okay, it's starting to grow out a little bit. It's starting to get there. But let's take a look at Friday. So what has happened on Friday? A lot of the information, a lot of the stuff that was coming out ended up happening earlier today. The pounds end up having very good retail sales. The Eurozone actually ended up having okay manufacturing market and PMI information. The Eurozone ended up having very good information, and the Eurozone and the pound ended up having very good information for the manufacturing market PMI for October. So what should we expect? We should expect that the Eurozone and the pound should get stronger when it comes down to this overall movement. Now, going into and taking a look at what's happening with the US dollar, we have manufacturing market PMIs as well. If you look at the numbers, based off of what they believe from an overall average, they believe that it should be over 53 and 54, which means that the market is basically coming back from this overall recession and starting to push up a little bit more. So even though it's not high impact, I want to see how this is going to end up being moved and want to see what the numbers are going to end up being, because if the Eurozone and the pound have done very well, but if the US dollar does very poorly at 8.30, or I'm sorry, at 9.45, then we should see that the US dollar should take another landslide, or at least start to take another down tick for this overall move. Remember, our mindset has changed from being that the US dollar was going to end up being bullish to the US dollar is going to end up being bearish. So the pairs that we are looking at being able to trade against it are basically those pairs that we just talked about and being able to go from there. All right, so let's take a look at the big three. US dollar index Like we said, we're looking at bearish activity. We've seen that this market has broken past this overall purple trend line. What we want to do is find high prices in the sell zone to be able to sell this. US dollar index is broken from the counter trend line, went toward the downside. If we look at this from this overall field towards the left, this one right here, I'm actually gonna end up drawing it out. I'm gonna get rid of this ABCD swing because that swing has been done. I'm gonna end up drawing out a new ABCD swing towards the downside. So we have our A to our B. Our C was up here. The market almost hit the 618. The market is expected to fall all the way down. The market is expected to fall all the way down to 11,542. Now we're hitting against the backside of that trend line, so we have a breakout and we have a retest that is in effect that's actually happening right now. Currently, the market's at 58%, so we need to pay attention to that for this overall movement. We go to the 2 hour. We want to see if this market is in the sell zone or very close to the sell zone, and if we have a counter trend line break. Well, we have both. Market ended up going down, had a huge move to the downside. We have a counter trend line break bearish right here, a strong counter trend line break bearish right here. This is a trading opportunity that we're looking at currently on this overall move. Now, a couple things in mind. If I'm looking at this from a how big this move actually was, I do expect that this market is going to end up pushing up, maybe just a little bit more. But if you look at something like the DXY or something like that, just the dollar in general, and seeing, okay, what is the move? What are we trying to do for us being able to sell it? I'll pay attention to this move right here. We see that the market went up to the 382. Market is expected to fall down to 11,910. Okay, so actively, you want to look at being able to trade this one. You necessarily could. Stop loss is going to end up being a little bit higher, which means that your entry size is going to end up being a little bit lower. If you understand what that means. Essentially, when you're trying to get into this overall trade, what I would say is I would lower my risk. I lower my risk and put it above 12,088. My take profit will end up being at 11,910. Essentially, what you're getting right now is you're probably getting the same risk versus reward when it comes down to this overall entry. Would have caught it up here probably about a couple hours ago. Maybe that would have been a trade. Right now, I don't see that same type of trade that's actually active. But if you are interested in being able to do it, that is the definition of confirmation that you can be able to trade with. So that's a 50-50 type of trade when it comes down to risk versus reward, and being able to take it from there. So you are looking at being able to trade versus the dollar. You can. Overall, this market to me is bearish. Now, let's take a look at oil. Oil happened. This focuses in on this 2 hour chart. Remember what we ended up doing on oil earlier this week. We ended up taking a sell. Market ended up breaking to the downside and popping and taking us back out. Again, the market ended up hitting this overall resistance one more time, and then after that going to the downside. If you would have gotten into that trade again, you actually should be up with the market basically retracing against you. Based off of exit rules, you should have been out of this trade already, just based off how quick the market ended up breaking the trend line to the upside. And for the people that are not into this trade, the one thing that I'm seeing now is we've had this one long resistance, and now we're seeing another resistance inside of that resistance, kind of like what happened with gold, where the market is falling down around this area. So we have a consolidation pattern inside of a consolidation pattern, meaning that if this market falls again, then I will only look at being able to get out at right around 39.75. If this market keeps on pushing up to the upside, and then after that falls again from 41.35, then I will look at being able to sell down to 39.75, and that will be the only position that I look at taking. Right now, the market is in no position to be able to take it, so I'm going to stay out of it. Looking at gold, so looking at the way that gold ended up playing out, let's talk about this. We end up saying that this market was moving in support, moving in resistance, moving in support, moving in resistance, and basically having these two areas where the market kind of had the same type of movement. We had this upper resistance, and then it fell to the lower resistance and then hit the actual bottom area. Now this one has lower resistance, and it's not being able to break past 1,930 for its overall position. And currently that's where we're at right now. Going into that Sunday to Monday trade, which is one of my favorite trades to be able to take. This is probably one of the easier trades to be able to take with confidence. This market ended up breaking past 1895. It actually ended up stopping me out when it came down to one of my long-term positions, but it ended up popping back inside of this consolidation. What I will look for is that since the market is in the sell zone, we do have a breakout. I'm looking for a retest on the 2 hour. as long as the market holds and stays right here between that 1908 area, or even below it, but gives you an opportunity to being able to get in, then I'll be interested in being able to buy going into next week, back up to those areas that we were talking about. Now, with that being said, I will only look at being able to buy this up to, this medium area right here, right around 1935. If that happens, then that's great. We'll be able to move on from there. Remember, we have a long-term D extension that we're expecting to get out at 1942. We might end up getting that angle to where it might end up pushing back up, but I do want to get a low price on this one. The market is in the sell zone, so we should see a drop off. I don't know how much of a drop off it will end up being, but the last time we have been looking at this, we see that we get a slow grind back up and a quick fall. A slow grind back up and a quick fall. We end up getting a slow grind up, and then we end up getting a very quick fall based off this position, which was kind of heartbreaking in being able to take a look at it, because I know for me, the minimum that I would like to be able to take out every time that I end up doing a trade is right around $1,000. And I was halfway towards that goal. And then after that, the market ended up turning around real quick. So want to be able to take a look at it again. We want to see if we can be able to have this thing move up towards the 1909 area, somewhere around that 1905 area. We can be able to get that as a buy, and the market breaks a trend line to the upside again, then we have a trade. That is a Sunday to Monday trade. Okay, so please keep that in mind. Gold is not in position now, but I do like the position going into a little bit later on. Let's take a look at the NASDAQ 100. NASDAQ 100, same deal. I do like a Sunday to Monday trade. Now, if we get into this market a little bit earlier, it might end up being a position. Keep this in mind. If I'm looking at being able to trade this, our stop loss automatically, it's going to end up being below the A. It's going to be below 11,202. That's about 400 pips from this actual spot. If you don't like trading, that way when it comes down to it, then you have to wait for the market to be able to break out, retest, and then try to find a 2-hour entry from there. But if you want to trade this and you want to truly be safe and give yourself a little bit of room, currently right now, that's a 500 point move. You want to do that. Now, for some people, may not be able to afford that. I totally understand that when it comes down to how many points it actually would take to be able to do that. That also lowers your risk when it comes down to being able to get in. So let me give you an example. This is something that our students end up getting if they decide to be able to go into the master class. This is our 5-star FMA. Our FMA is our Forex Money Advisor. This basically tells us how much we can be able to add on to any trade that we want to be able to get into. This is set up to where it works for all the indices. Is set up to where it works for most U.S.-based pairs. So let's say if we end up having, let's say we have 8,500 inside of our account. We want to be able to do this based off of 1% of our account. And our total points risk right now is 500. It's going to tell you that you can only be able to get in with a lot size of 0.1 micro lots. Now, the reason why we're doing it like that for the first entry is because we want to be as safe as possible for us being able to get in. Now, if we're looking at this, the next question will be, okay, well, what is the reward? How much are we actually going after when it comes down to this overall position? Well, that answer will end up being this. We want to go up to 12,911. 12,911 will end up being that overall move. Currently, right now, we're talking about a 1,200, 1,231 for the overall gain. I keep on saying 1,200 for some reason. 1,231 for that one. We end up bringing in $1,300 for this overall move. Now, that's not saying that you cannot add on to the trade. I'm just saying that if you want to be able to do this very safely, you can do this based off of a micro lot and be able to go from there. Now, you want to be a little bit more aggressive, then you can wait for this market to be able to break out of this overall trend line to the upside, because it's getting very close to the buy zone, in which it broke the inner trend line, broke the outer. It is in a sweet spot position. I do like this overall trade for us, a overall area of being able to get in. I'm going to keep that toward the upside and being able to go from there. Now, let's take a look at this from a 2-hour perspective. 2-hour, we see that this market has been in consolidation. There's two ways to be able to think about this. One, looking at that a little bit earlier. The D extension on this one is at 11,487. If the market falls down and rejects again and it gives you a low price to be able to get in, I would look to be able to get in at a low price, being able to buy up to the upside and be able to go from there. If this market ends up breaking out of this position, going into going into today and going into what's going to be Sunday to Monday, I will look at this market retracing back, falling right around this point of control at 11,684, and then after that, looking to be able to buy up. Now, by doing this, you'll be able to know where your fractal low is. Your fractal low will be at 11,530, and anything below 11,530 will end up being where your stop could be based off of the 2-hour. Now, if you end up doing that, essentially now your risk is cut in half. Your risk will end up being right around 175 points. Now let's think about this. Let's do this again. We do 175 based off of that overall risk. Now you can go with 3 micro lots and be able to go after the same type of risk reward. You have a 1 to 7.3 risk reward. So that means that you're going to end up risking about $400 to be able to make about $3,900 if the market keeps on moving towards its overall position. Anything over $1,000 is a good trade when it comes down to this overall move and being able to add on to it, if that makes sense. Okay. I don't know what happened with Instagram. We'll take a look at Instagram a little bit later on. Matter of fact, I'm just going to go ahead and end it with Instagram because the video just paused on me. Okay. So I'm going to end up deleting that one and going from there. All right. So buy trades. I am interested in being able to get into the NASDAQ 100, but I want to be able to get it at a low price. Would have paid attention, got it when the market was at 11,513. That would have been a very good position. Currently, you would have been up 131 points. But right now, we are waiting on this overall move. The next thing that I would kind of end up paying attention to is if that's happening, then we have a 2-hour upfield that we could be paying attention to right now. Let's take a look and see what that actually is. It goes low, a high price right here. It's right here. So if the market ends up breaking up and hits past 11,787 on the breakout, that's the first move. The market should retrace from there. Probably fall back to the point of control at 11,688. And then after that, you have an upside move from there that you can be able to take. I'm looking for a low price. Market is in the sell zone. I don't like what I'm seeing right there. I want to see if we can be able to get a little bit lower before moving on. So once again, Sunday to Monday trade. I do like that, but right now we're not there yet. Okay. Let's go to the currency strength chart. Let's see what's happening. Kind of get an idea about what's happening with the market. Currently right now, the Australian dollar is up and the pound is down, which doesn't make any sense if we're looking at how the pound ended up having very good news. But we see that the pound and the U.S. dollar is down. The U.S. dollar has been weak overall. Yesterday actually ended up having a somewhat strong day from a retracement move, but the New Zealand dollar was very strong pretty much most of the day when it came down to that. Now, obviously, that's because of the economic news that ended up happening. People started trading it just because it was there. But everything is kind of in a mixed bag right now. There's really no, if I'm looking at this, there's really no position to be able to take unless we're trying to scalp the market. So that's what we'll pay attention to. Let's see. We said that today was the Australian dollar and the, let's go Australian dollar, United States dollar is the first trade that we'll take a look at. Okay, so market is in the buy zone. We said that overall that the U.S. dollar index was weak. We said that we wanted to be looking for buy trades. Market, even though what we're looking on this one, I think the Australian dollar is probably the last one to be able to move. It's probably going to end up moving bullish, but we are getting close to the buy zone off the weekly, and the daily has already moved from the buy zone in our overall position. It's just not there yet. We do have trade confirmation off the daily though towards the upside. This market to me is still considered to be bearish, because the market has broken the counter trend line, but the market has not broken above this overall high right there. So with that being said, this one is kind of a mixed bag. So I'm going to kind of state, I think I'm going to end up staying out of it only because we see that the weekly is trading toward the downside. We see that the daily is starting to trade, or the daily is still in the down zone. It looks like it's more of a support resistance that has been formed. We have these two resistance that have been basically in the same spot. We have two supports that have basically been trading in the same spot. So we see that the low was 70.20. We see that the high was right around 72.14, so 7,200, somewhere around there. So I'm actually going to end up making this a support resistance. Let's see if this matches up with anything that we had to the previously. Yes, we do. Okay, so this market has went from an R2 all the way to an R4. That's a consolidated area. So I'm going to treat this as consolidation. I'm not going to treat this as a trending trade anymore. So with that being said, now we have support resistance that we could be looking at. The market gets up to resistance at 72.33 and it gives us an opportunity to be able to sell. Then I look at being able to sell from there. The market has already done bounce down from 70.24. So there's really no trade at that particular point. But now we're looking at support resistance right now, and we will go from there. Hopefully that makes sense for everyone. I end up seeing how I end up doing that. We have a bona fide resistance that has been used for the last few days. We have natural support that has been going on for a while as well. So we have right here, we have right here, right here, and right here. We go previously, we can see that we had this overall area turn into past resistance, turn future support right here as well. So that is a pivot. Now, not necessarily the greatest pivot in the world, because typically you'll see it at whole numbers, but we do have that same type of position right now. So I'm looking at this as more as consolidation. With the market being in consolidation, I'm not trading it yet. US Swiss franc, seeing that this market ended up making a downside move yesterday. It broke the A. With it breaking the A of this overall move, now this market is considered to be bearish. And that's exactly what it means. The market is at a low price right now. I'm not just going to sell it just because it's at a low price. I would rather get a high price to be able to sell it back down. Okay, so what I'm looking for is a counter trend line break bullish. Once we end up getting that counter trend line break bullish, and after that, we can look to be able to sell it right around this B area, which would be right around that 91.20 area. We can be able to catch it right around this structure right around here. I'll be interested in being able to sell it toward the downside. So this is what I want. I want the market to be able to go up, and then after that, hit off of this overall position. Then after that, look to be able to trade it down. I think we have a lot of good setups. I think these setups are going to end up helping us out for next week for us being able to get in. I don't think that what we're probably going to end up looking at and seeing if we have any setups going into now. Well, maybe I spoke too early. Let's take a look at this trade when it comes down to the euro versus United States dollar. Market is in the buy zone. We end up having a huge push up a little bit earlier, broke the trend line toward the upside. Market ended up moving 49 pips right there. Then after that, it has broken and retested off of this area again. The market is considered to be bullish. The only thing that I don't like about it is that I don't know if it's caught too much steam already just to be able to go up off of this move. That is a huge push to be able to break bullish off this move already. Let's see, the market ended up moving 61 pips over the course of the last, probably over the course of the last 5 hours, just to be able to get this move right here. So this would necessarily be considered to be our low price for being able to get in, but we do have a breakout of the outer trend line. Now, in this case, beggars can't be choosers on this overall move. If we would have caught this at 2 o'clock, then quite frankly, would have been on this trade, would have been up already. Let's see, let's take a look at the daily. Let's see what's going on with the daily. It's daily in the buy zone. Okay, daily's out of the buy zone. We have a D extension that's suspected to be at. Okay, I'm not looking at that small one. That one doesn't matter. We have a D extension that's suspected to be at 123. 123.65. 123 is a point of control from what we ended up looking at previously. What we could do as a long swing trade for us being able to get into this is that I'm going to end up looking at this fractal low right here. I'm going to place my stop below the fractal low. Weekly. Go to the weekly real quick. I just want to see what's happening. Weekly is close to the buy zone. I like this as a trade. I like this as a trade. I'm going to lower my risk because I want to be able, if the market falls down again, I want to be able to get in I want to be able to get in with another entry, but I do like the risk. I mean, I do like the entry for being able to get in. Let's see. The reason why I like it is because it's broken out. It's done retested in this area. Market is close to the buy zone. We will probably end up having this position kind of fall on us. We probably might be down slightly on this overall position, but with that being said, I do like the chances of saying that we can get into this trade and add on to this trade while we're moving on, while we're going to its overall de-extension. Stop loss will end up being at 117. I'm gonna say 117.55. Let's see how many. What is the risk from here to here? 117.55 is 90 pips. So 90 pips risk. We're going to go after the reward, which will end up being the daily reward on this one. We're going to go after 123. 123 from 123.65 from right here is approximately 530 pips. So I think that we're getting in at a very good price. So it'll be 123. Let's go 123.60, which will be 521 pips from there. So let's see how much is that going to cost us for us being able to get in. So let's go through this real quick, and I'm kind of giving you a little bit of backstory, kind of giving you a way of being able to see it. We're in a no trade zone, so it's going to look at we have a counter trend line break bullish. We're going to end up calling it an R2. Okay. Let's see. The daily up. Daily's up in an R2. We're going to enter this trade based off of a R2 entry. Stock, there's a counter trend line break, yes, but there's no, the stochastic is not in the buy zone. Okay, so that's the one downside thing. We look at the weekly. The weekly has a counter trend line break. The market is getting close to the buy zone, which means that we should see some upside movement from this overall trade. So I'm going to consider, let's see, jumping around here. Weekly does have a counter trend line break bullish, which was right here. It retested about 60 pips ago, so we missed out on that position. But once again, if we woke up a little bit earlier, then we could have had that position, but we didn't. So weekly is considered to be up. Weekly is at a R2 as well. Okay, so currently right now we have a 89% chance of being able to go after. We're going out to 90 pips, trying to go out to 531. That means that if we're trading this off of 5%, we'll be risking $500 to be able to make $2,900 off of this overall position. We can go with 5.5 lots. I'm going to end up making this trade. This is going to be an active trade to be able to get into right now as we speak. I would wait to Sunday, but we might end up getting a drop on Sunday and might not. But I'm going based off of what I ended up looking at a little bit earlier, or based off of what we're looking at now. This is an active trade to be able to get into. So if my phone will let me get into it, it would be great. Let's see. Once again, I would wish that we was in it a little bit earlier, but currently that's not the position that we're in right now at this particular point. Okay, something's going on with that. Come on, come on, come on. Might have to do this through my. Okay, there we go. My VPN should have caught that. Okay, I am in on a buy on this overall trade. I end up getting 1.8489. Obviously, my stop loss is going to be 1.17. 1.17, 55, 90 pips risk. That's based off of the 2 hour. My reward, going based off of what we're looking at right now on a daily, is 1.23. I got 1.2365. Okay, so we are in on this overall trade. Now, the only thing that I'm kind of worried about right here, and I don't know if only thing that I'm kind of worried about is that, am I getting into this a little bit late? Just because of the support that has been pushing up right here. We placing our stop below that support. The question would be, are we looking at consolidation? And that's a very strong question to be able to ask. And I probably should have asked myself before we took this entry. Am I looking at consolidation? So what I'm going to end up doing is this. If this market struggles to get beyond, let's see, what was the high of this move? If this market struggles to get beyond 1.1950, this market struggles to get beyond 1.1950 and rejects back down, that will be an early exit for me. Matter of fact, let's say, let's go to the average of it. If it struggles to get beyond 1.915 around that area and does not break from there, then I go ahead and I quickly get out of it. The market ends up rejecting from there. Okay. The reason why I'm saying that is because if this market is in consolidation, then that means that it will pop up to the upside and then drop right back down. So this answer may end up being something that we may end up getting today. It may end up being something that we may end up getting starting on Sunday or Monday. So I want to pay attention to that first, because if this is consolidation, if we are looking at this as a consolidated area, then it won't let me break out. It probably won't break out of this overall area and push up to the upside. Based off of looking at this on the daily. If we look at this off of the weekly should be pushing up towards this overall level. I'm okay with the risk. I'm okay with if I end up losing what I would end up losing. But that is what I'm noticing right there. So okay, so what I'm going to do, I'm going to set an alert at 1.1913, and if that does happen, then after that, I look at being able to get out of that trade. If the market ends up rejecting from that spot. Okay, so there we have, there you have it. We do have a trade today. It is past our time for today, but we were able to find one trade for today. You like what we end up doing, please make sure that you like the Carter Cow Capital business page. Please make sure that you subscribe to Trade with Travis on YouTube. Also, remember that we have our boot camp that's actually coming up from October 26th to October 30th. Going to end up being a very good boot camp to be able to hop into. 5 days of overall learning. If you are someone that's new, that's interested in being able to get into it, make sure that you end up taking time to be able to register yourself for that. It's always good to be able to invest in yourself, and this is the time to be able to do it. Quite frankly, you learn a skill that no one can be able to take away from you. You can turn around and be your automatic. You can be your own ATM machine. Quite frankly, if I would have known this 5, 6, 7 years ago, quite frankly, I probably wouldn't be in this position as saying that I would be teaching right now. I'll probably knowing what I know now, I'll probably be in a position to where this will be my only stable income that I'm actually doing. So we'd love to be able to talk to you about it. We'd love to be able to show you what we end up doing. All you have to do is basically reserve your seat, or you can send me a message about it and being able to go from there. Like always, believe in yourself and change will end up coming. And like always, plan your trade your plan. We'll see you in the next video. See you.